very much, and it's a great pleasure to be here. I'm just taking off my watch so that I can watch the time and make sure that I don't overrun, but as Jesper said, I don't propose to speak for the whole time allotted to me. What I'd like to do is spend some time at the end on questions. It's a great privilege to be here at such a distinguished business forum and such a distinguished business school. As I was introduced, I spend, like many people in the financial industry, I spend increasing amounts of my time on regulation and policy. Since the crisis, much of that process of regulatory change has been about restricting what banks and other financial institutions can do. Well, we understand a lot of the thinking behind those changes, but whether these, and one of my set topics was what some of the lessons might be to learn, whether those are really lessons that emerging market economies should learn from the West, I'm not so sure. Perhaps that's something we could discuss later on. As was already announced, I work for HSBC, but perhaps for a topic like this, and for an audience such as yourselves, I should talk about the Hong Kong and Shanghai Banking Corporation. And particularly, I'm particularly pleased to be here today because, as I said, I spend a lot of my time talking about regulatory change in a sense of a limiting rather than an enabling proposition. So building a business around the development of the RMB is such an attractive proposition for someone like me. Instead of regulatory restrictions, what China's doing is gradually reducing the burden of regulation on key parts of its financial markets and on important aspects of its economy. So this is the kind of focus of what I'm going to be covering today. I do have a few slides, and I appreciate this is a business school, so, but it will not be death by PowerPoint. These slides are just to illustrate a few of my comments. I'm not going to go through them and certainly not going to read out the bullet points. At HSBC, we call it the RMB or the renminbi, which I understand means the currency of the people. I think that's a good description because the currency does still belong to China. That's because it's not freely convertible, and until relatively recently, as you will know, it couldn't even be used outside China. But history tells us that international acceptance of a currency usually goes hand in hand with the rise of a country's economic power. The British pound dominated the 19th century, the US dollar dominated the 20th century. In the 21st century, while the US greenback is and will remain the leading global currency, growth in the global economy has been led by China, and with that we should expect to see a rise in the RMB, the redback. I will pull up one slide now just to I'll try and pull up a slide now. I say I'm not going to go through the slide, but I think the first chart shows you, China's achieving rates of growth that can only really be dreamed about in many developed economies. And at HSBC, we expect this trend to continue. Chinese GDP will probably grow by, 7.5% this year. Inflation's pretty well under control. And the hard landing, perhaps some people were predicting for the Chinese economy, has so far not happened. I think it's also important to understand the signals from the central bank and the Chinese leadership. Growth, yes, but not at any price. And I think a lesson, perhaps, for all central banks is where you do have cheap credit available to the economy, if you decide to withdraw it, that has to be a very, very carefully managed process. And as China continues to grow, use of its currency should increase. That should be a natural consequence. I think the other, the chart number 3 is also worth just looking at. China's growing and increasingly affluent middle classes will help to boost domestic consumption inside China and create lots of opportunities for offshore companies to export goods to China and to sell some of the goods they've had manufactured in China there to Chinese consumers. There are now several hundred US dollar billionaires in China. Companies like Jaguar, Burberry, and other high-end luxury brands see success in China as absolutely key to their future. So China's now moving into the next phase of its integration into the global economy. So why is the RMB, the rise of the redback, why is it so important? We think the RMB will be a key part of this process of integrating China into the global economy. And companies competing for a share of China's growth story will increasingly look to use the RMB to settle trade, to make investments, and to fund their businesses. China has the biggest population, it's the world's largest exporter, the second largest economy now, and the most popular destination for direct investment. But until 4 years ago, the RMB had virtually no exposure, no presence in international markets. Strict controls prohibited almost all export of the currency and any use in cross-border transactions. So the offshore market, as we now call it, just didn't exist. And all the payments between Chinese companies and their foreign partners were dollar, yen, euro denominated. And that adds an element of currency exposure, of currency risk. That's not to say that all Chinese trading companies have happily embraced the RMB from day one. In fact, anecdotal evidence suggests there was a little bit of reluctance perhaps from some corporates who actually said, well, I make this amount from manufacturing components and I make a little bit more from an FX play with my US dollars. So there was a little bit of perhaps residual resistance from trading companies to invoice, to trade and settle in RMB. But that's changing. And it's being driven by regulation and policy changes at the highest level. I mean, make no mistake, the new Chinese leadership is absolutely committed, we believe, to this process of market liberalization. And if anything, the pace of change has recently quickened. In May, the State Council asked the People's Bank of China to deliver a full plan, a plan to full convertibility. They want the plan soon, either this year or early next. To get to full convertibility will take a little longer. And there's also a very important dialogue with Western governments, and particularly the UK government, actually, which has got a very good now economic and financial dialogue. Some of you will have read of the Chancellor's visit, the UK Chancellor's visit there earlier this month. Relations between China and the UK appear to be moving on to perhaps a new level. And when we're seeing signs of the potential for sort of coordination of some policy, and that could help. Takes two goes to change a slide. This slide is meant to illustrate rather than to explain bullet by bullet. As you can see, the pace of reform and market liberalization is increasing. We're going from 1 or 2 announcements a year to 2013, a series of announcements, all designed to increase internationalization of the RMB. It's a door which is gradually opening, but it's not always as carefully stage managed as perhaps some people might expect. We think there is an element in which China is experimenting to find out what works and what doesn't. There are new schemes to move funds onshore and offshore. There are quite a few of them, and they won't all work, and they won't all be rolled out nationwide. One such experiment that I've been deeply involved with is to permit London and other financial centres to become hubs for RMB business. I say permit, I mean, you know, in most economies, there is a degree of freedom about, you know, what products you can trade. subject to obviously an overarching framework of regulation. And the City of London is one such centre, and is outside Hong Kong is probably the most successful RMB centre by any measure I think you care to assign to it. This is in part a recognition of London's experience in innovation. You know, building, for example, the euro-dollar market. London's shown an aptitude for developing new markets, new financial markets. And London can also provide something that other offshore centres in Asia can't. And that's to give access to the Americas and to a global pool of assets in the European time zone. So London can potentially offer a different kind of test bed for RMB internationalisation, something that Asian centres just can't do. And London is also the #1 foreign exchange centre with, however, depending on how you count it, 40% of total volumes. That helps. And it does help, as I mentioned before, that the UK authorities are kind of firmly behind this process. Another slide. This is really focusing on policy changes in the onshore bond market. Again, more interesting perhaps just to see the quickening pace of change. And in 2013, there were a couple of new announcements, which I'm going to come on to a little bit later in my remarks. But it's a similar picture. Gradual liberalisation with the pace of change quickening. Schemes being extended, quotas increased. It's more and bigger pipes to channel funds on and offshore. And I think that's an important consideration. We see this, and I think certainly the Chinese authorities see this, as a two-way process. This is not about extending opportunities for speculative funds to flow onshore and inflate Chinese asset prices. This is also about helping China's going out strategy. And it's about, as I said, a two-way flow of funds. It couldn't be a presentation in a business school without some buckets. So we've got some buckets here. This is how we see RMB internationalisation at HSBC. We first see it as a global trading currency. I think that's already happened. While China's share of global trade is increasingly dominant between 1980 and 2011, 1% of world trade in goods to 9%. And now it's more. But as China's share of global trade still continues to grow, most of these goods are still not paid for in RMB. In fact, it's maybe 2% of global trade settled in the Chinese currency. This shows you the potential for growth as the RMB internationalizes. And trade has been the chief driver of internationalization so far. And we think that this is what the Chinese authorities see as the right approach. So it's happening based on real economy flows, not on investment flows. Some more stats. In 2010, 2.6% of import and export goods trade in China was RMB denominated. In 2011, 6.4%. 2012, 8%. It's now more like 12%. This is happening, and it's happening quickly. And importers and exporters are switching now to invoicing US dollars. Invoicing from US dollars to invoicing in RMB. And today, pretty much all trading companies, unless they for some reason have been prohibited, all Chinese trading companies are permitted to settle trades in RMB. As I mentioned to you, there was a little bit of inertia perhaps, but we see critical mass building. And we see now, certainly the companies that we bank, both in China and offshore, increasingly switching their payment systems to be RMB denominated. And this is happening not just obviously between Europe or UK and China. This is happening all over the world. So I think we can say, already the RMB is a fully internationalized trading currency. And what this does is it starts to create a pool and a source of RMB liquidity around the world. It's still a trickle compared to the sea of US greenbacks there is out there, but it has the potential to become a tide. By 2015, our research expects that around 30% of China's trade, equivalent to around $2 trillion US dollars, will be settled in RMB. That would make the RMB a top 3 global trade settlement currency in just 2 years' time. So why are companies doing this? Well, in simple terms, you can get discounts. It can give you better access to China's consumer market. It can give you funds that you can then use onshore for investment and for developing your business. And that consumer market that I mentioned, is potentially really attractive. HSBC research says between now and 2050, the average Chinese worker's income we expect to increase 7-fold, from around $2,500 US dollars now to $18,000. And that's a lot of potential consumer spending that offshore companies are keen to participate in. And being an early adopter of the RMB could mean gaining market share, negotiating discounts, as I've mentioned, or insulating your trading partners from the currency risk that they used to face before. So I think we are now in phase 2, in which the RMB is becoming an investment currency. For most of the 20th century, it was trade in goods and services that dominated the world economy. And it's now financial flows. Today, the annual trade in goods and services is about 25 trillion US, whereas the trade in financial services is closer to 1,000 trillion. So that's a quadrillion, I think, isn't it? Anyway, it's a big number. And that's the part that I think China now wants to get more involved in, and that's the stage 2, becoming a global investment currency. And the offshore market is already well developed. And as the RMB is not yet fully convertible, the Chinese government has promoted that offshore market, dominated by Hong Kong, as a kind of an intermediate step. And it's taken off. I mean, since the first offshore RMB bond was launched in 2007, issuance has gone up from 10 billion RMB to 280 billion in 2012. This year, it's probably going to hit 350 billion. There have been lots of interesting offshore issues. For example, yesterday, the British Columbia launched an RMB bond, a AAA sovereign bond in RMB. Participation, we were the sole lead manager. Participation was very active from within the US. It was tightly priced, i.e., they raised money for less than perhaps they were expecting. That's good. It was oversubscribed. That's also good. Major companies like Volkswagen, Tesco are now using the offshore market to raise capital in RMB. And recent years have seen the emergence of other offshore centers who are keen to participate in this emergence of the RMB as an investment currency. We think London is still going to be the leading Western hub, but complementing Hong Kong, not directly competing with Hong Kong. London's pension funds, insurance companies, and hedge funds are already thinking about their options in RMB as an investment class. In London, in April 2012, we issued the first international RMB bond outside Chinese sovereign territory. There was great demand from European investors to participate in that, with over half the allocation going to European accounts. And that's significant. But it's not just an offshore story, as I said a moment or two ago. Investment channels on the mainland have also been opening up. The eligibility of foreign investors to access China's interbank bond market has expanded. Now, supranationals, sovereign wealth funds, and insurance funds can participate. And I think very significantly, the RMB Qualified Foreign Institutional Investor Scheme, known as RQFI, not only has it increased and the restrictions on portfolio allocation have been lifted, but on the 12th of July, following a visit we made to China to talk to the PBOC about what we thought would help develop or take RMB internationalization onto the next stage. Within 10 days, PBOC, SAFE, and CSRC announced that RQFI would be extended to London, Singapore, and Taiwan. And although the details are still being worked out, this is potentially a very big deal. It means that UK domiciled investment funds will be able to invest directly onshore. It's not a fire alarm. We're not going to, A survivor said, we just ignored it. Sorry. Although the details are still being worked out, as I said, it's a big deal. So UK funds will be able to invest directly onshore rather than going through Hong Kong. This scheme and others promote these two-way flows of investment between the onshore and offshore markets. And this is all about quickening the pace of capital market opening. And I think as Western investors or offshore investors start to participate in the bond market, what this will do is will exert upward pressure on what you might say call the quality of standards on that market. You can regulate your way to higher standards, but actually market pressure can be a more efficient mechanism. So as offshore issuers and investors start to participate directly in China's bond market, and as the implicit state guarantee that used to be there is withdrawn, we think this will raise the bar significantly. And although London's sort of quota for RQFI looks quite small, it's only 80 billion RMB, the Chinese authorities have said, when London uses it, it will be expanded. So we think this is a very exciting proposition for the UK, but also potentially for London as a European fund management centre. This fits very closely with the UK's government to develop London as an investment management centre. And so London could then act as a funnel for bringing funds from other Western centres through London and onto the onshore market. And equally, London can act as a fund management centre for Chinese funds looking through schemes like ODII, Overseas Direct Institutional Investment, to increase their participation in the offshore market. And these financial flows are just kind of one side of being an investment currency. The other side is just opening up to capital flows, allowing businesses to invest, to buy other businesses, to build factories and other facilities. In 2011, 12% of FDI into China was RMB denominated. In 2012, it was 3 times that much, a huge increase. And it means that for a company, whether it's an offshore headquartered company or an onshore headquartered company, it can manage its cash in a much more efficient way. Funds can be employed and deployed efficiently and conveniently. And this way, I think the trade and investment phases of RMB internationalization will begin to kind of support and reinforce one another. So now we move on to stage 3. RMB as a global trade, as a global reserve currency. Some central banks have already started accumulating RMB reserves in the form of cash and bonds. Russia, Saudi Arabia, Thailand, Venezuela, Nigeria. The Bank of Japan has now got an RMB Chinese government bonds in its holdings. The Bank of Korea will be doing something similar. But RMB reserve status is definitely a prospect for the long term. I think in the medium term, full convertibility is the essential step towards becoming that global currency. I also mentioned at the beginning some experimental phases. We see Shanghai developing further as a leading financial center. The Shanghai Free Trade Zone may have an important role to play here. As I mentioned at the beginning, there's an element of experimentation in the process. The Chinese will look to see what works and what doesn't, won't be pursued, and what does may be rolled out more widely. One more slide, I think, and then I'll sit down and take some questions. So we're now seeing 160 countries in the world doing RMB business outside China in a typical month. Major hubs developing: London, Singapore, Taiwan, and others in Europe: Frankfurt, Paris, Luxembourg, and in the European time zone, Dubai, and in the Americas, Toronto, all looking to become RMB centers. As the slide shows here, more than 20 countries have signed RMB swap agreements with China. We think this is an important element. By creating a liquidity backstop, the PBOC and other central banks are agreeing to make liquidity available if the commercial banks, for any reason, can't access enough of it. The Bank of England was the first major central bank, and we were very supportive of that initiative. It was one of the last governor's last acts. So what's next? A series of market liberalizations enabling commercial development. RQFI for London will be important. Retail accounts are growing. Use of RMB for cross-border transactions is going up and almost exponentially. Perhaps more important still, we're beginning to see what some people call the de-Americanization of some global markets. We're starting to see commodities, even oil, beginning to be priced in RMB and not US dollars. What will happen when the US becomes self-sufficient in oil and is no longer the biggest customer for Middle Eastern oil? Will that be priced in US dollars or RMB? The process is beginning. Maybe that's a discussion for another time. I guess in summary, the RMB is increasingly part of normal day-to-day business for anyone trading with or investing in China. RMB investment opportunities are being created around the world. The gradual opening of China's financial markets is creating these opportunities, and the pace of reform is, if anything, accelerating. Where will it end? It's not easy to predict. I think anyone who predicts the death of the greenback will be at best premature and at worst completely wrong. I think this slide, and perhaps the one after, show a little bit of why it will take a lot longer. This is how you access the RQFI process. I put it up just to illustrate just how complicated the process is. You have a lot of different regulatory authorities with lots of different, sometimes slightly competing interests. It's bureaucratic, and it's difficult. So if there are lessons, perhaps, getting rid of red tape and easing time to market, those are lessons that authorities in the East and the West should learn. As I hope I've demonstrated, this process of RMB internationalization is not just in the hands of the private sector. It's a kind of public-private sector partnership. As to what lessons there might be for China to learn from developed economies, I'm not sure there are that many. I think next time we have this debate, we could be talking about market liberalization, lessons from the East. Thank you very much.
Don't go away. We've got some questions.
Do you want to take a seat?
Maybe take a seat, and we've got a bit of time before we have our panel discussion about the liberalization of financial markets. We've got an all-star cast of economics and finance experts who will be able to field some more questions. But we've got a bit of time before we start with that, and so I'm going to ask the audience to ask Ed for some questions, and I'm going to kick off with a few of my own. And one of the things I don't understand about this convertibility of the or the internationalization of the RMB is how can you have a currency which can be traded when it isn't actually convertible, and in which the exchange rate with the US dollar, the base currency, is in the hands of the government, and we don't know when they're going to change its the fixed exchange rate. So I'm not quite sure how this would work, because I don't think this has ever happened before.
I think that's a very good question. This is a new world in that sense. I don't think this has never been done before. How do the markets treat a not fully convertible currency? Well, of course, there are in effect there are two currencies. There's CNY, the onshore currency, and there's CNH, the offshore currency. And although the prices of those track one another pretty closely, there is a difference, yes. And there are pools of liquidity now building offshore, which it's not always easy to move around, particularly if you want to move them back onshore. So I think the answer is, how does it work with the managed exchange rate? I think we've seen since 2010 the appreciation of the Chinese currency has been around 12%. That's not as fast as some people would like, but there is a gradual appreciation. What has gone away is what you might call the appreciation story. So I think now those pools of RMB liquidity around the world will not be held by fund managers and just kept kind of on deposit because their value is expected to increase. They're increasingly being put to work. And so looking how we develop the markets and the channels, if you like, for funds to move on and offshore, that's the thing that we need to do. And I think through the RQFI scheme and the ODII scheme, the institutions will gradually help to develop the channels for those funds to move on and offshore.
As many of you know, we've got a key party plenum coming up in just a couple of weeks. I think in 10 days, in fact, the party will be holding a key meeting which is expected to announce a lot of new economic reform measures. Do you expect anything to be announced about the convertibility of the RMB or some timetable? Or?
As I mentioned to you, there is a requirement for a plan for full convertibility, and several of the regulators have been visiting other financial centres, coming to London, asking questions, and looking for, if you like, what the priorities should be for moving to convertibility. And that operational plan will be delivered, and we think it will be delivered either this year or early next. So, and if you look at sort of speeches by the governor of the central bank, he made bond market opening a key plank of his economic sort of platform, and so the opportunities for offshore issuers and investors to participate in the bond markets, those will grow, and that's significant.
Would they make the RMB freely convertible at one stroke? And if they did, what would happen?
I think we've never predicted a kind of big bang approach to this. As I mentioned, I think in my remarks, this is a kind of staged, gradual opening of the door. That said, the Shanghai Free Trade Zone will have elements of full convertibility. There will be the opportunity for institutions and firms inside the zone to move funds on and offshore, more or less as they want. So can you close the door once you've opened it? I'm not sure. Will Shanghai, will it really take off? There are lots of questions really still about people, trying to understand exactly what's intended. I don't think that there is an answer to all those questions. I think actually this is in degree an experiment. Let's see what happens. Let's abolish some of the current rules and regulations that constrict the opportunities for foreign and Chinese firms to move money around onshore and offshore, and let's see what happens.
And what do you think people in London are going to do with this 80 billion RMB? Because it's pretty well known that even people have that kind of money in China. Most of the sectors are closed. The stock market doesn't deliver any decent returns, and so a lot of this money just floats around and goes into property or in the art market, as we were hearing before. So what is this money in London going to be? How's it going to be used?
I think increasingly we will see that money allocated to what you might call the more enterprise-focused parts of the Chinese economy. So less towards local government debt, perhaps, more towards trading companies. But that will depend in part, I think, in the confidence that offshore investors have in the quality of the markets. I mentioned this implicit state guarantee. What that does in effect is, once you underwrite a market, it's not really a market anymore. So a company that's triple C suddenly looks like triple A, and that's actually not good for the long term. So we have seen a couple of defaults in the solar energy sector. And actually, I think our reading of that is that's a good sign, because once you don't have that implicit guarantee, then investors have to do due diligence. And that means the issuers have to raise their game as well. So we see market quality beginning to improve. And now the restrictions on what you can allocate your funds to, it used to be very restrictive. Now those restrictions have gone. It's more kind of freestyle investment. You will see those funds targeting the more attractive parts of the Chinese economy. I don't think it's just going to be a property bubble. I think it's going to be focusing on the enterprise sector of the economy.
Right. Perhaps we can just take 2 quick questions before we start the panel. We've got a couple of minutes. Has anyone in the audience got a particular question? Yes, maybe the gentleman at the back there.
Hello. Yeah. Thank you for your presentation. I'm an MD. I'm a student at LBS. We all understand that HSBC has been a strong supporter for the full convertibility of the RMB. Just curious, what's the bank's view on the potential resistance, as in if the currency has to be full convertible, the exchange rate won't be fixed anymore. Are all the Chinese enterprise prepared for it, given that the economy has been slowing down for recent years? Thank you.
Well, yeah, I'm not sure the economy's been slowing. I think the pace of growth has perhaps been slowing, and I think that's potentially making that more sustainable. And I think so. Conversely, that's a good sign. I mentioned at the beginning that renminbi means the people's currency, and it still is China's currency. Once it becomes fully convertible, then it belongs to the world in the same way the US dollar belongs to the world, and that will be it's like parenting. It's gradually letting go, and we are seeing the Chinese authorities gradually letting go, and with new schemes like the Shanghai Free Trade Zone, that is a clear sign that the Chinese leadership wants to experiment with full convertibility. So let's see how it works. Let's see what happens. I mentioned the door gradually opening. We don't know how fast and how far the door will open in the next couple of years. We've been predicting full convertibility by 2017. The Shanghai Free Trade Zone has a 3-year kind of time allotted to it, potentially. So if it gets going later this year, beginning of next year, then that 3-year prediction could prove to be correct, because the authorities have said that the Shanghai experiment could be rolled out nationwide in 3 years. So that would square with our timetable. As I say, we can't predict with any certainty, but the direction of travel is clear and unmistakable.
Well, Edward, we're going to have to bring you back here in 3 years and see whether you're right.
As I mentioned, it will be lessons from the East.
Is Jeffrey in the audience? And yes, we're now going to have a sort of broader panel discussion with some other voices. Jeffrey's expert in foreign exchange. He's been he's now working for UBS, but in the past he studied in America and in Britain. And he's now going to moderate the panel discussion and will introduce the different panel methods. So I'll hand over to him. A round of applause for Ed, perhaps. Thank you very much. And he's staying. Yeah.